What's going on, everybody? In this video, we're going to be talking about how to trade the Bulldog pattern. So this pattern is not a pattern that I created myself. It was actually a pattern that I found from a trader on Twitter many years back. I don't remember exactly who it was, but it's very similar to the textbook pattern known as the Dragon. And basically, we're going to start off in this video. We're going to freehand how we find the Bulldogs, how we look for targets, how we trade it with our stop losses, and then we'll go into some actual examples that happened today. Let's start off with the freehand drawings. So starting off with the actual pattern itself, typically what we look for a Bulldog, you want to look for a downward impulse. So you want price to be kind of downtrending. You want price to find a pretty strong bottom. You want this bottom to be decently quick. You don't want it to be an absolute V bottom, but you don't want it to sit there and hang out and accumulate for a very long time. So you want it to find a bottom. You want it to start bouncing off of that bottom and creating a curved kind of bounce pattern, almost like a bear flag, but more of a curved back, a curved accumulation. So we start to rise, we start to kind of curve out, and then we fall back down to that original low. So it's going to create somewhat of a double bottom pattern on that low. Once again, you want it to be fairly quick, but you don't want it to be a complete V-shaped bottom. So once it forms that second low there, then you go for a bounce off that second low, and typically it's going to stall out around where that back was formed, around where that initial resistance was before putting in the double bottom. So it's going to bounce up and then typically find a bit of resistance there and start to pull back again. So this is where the Bulldog pattern really finalizes its shape. So what you want to look for here is you want to look for a shallow pullback. You don't want that pullback to be very deep. So typically what we say is about 25 to 30% of this move here. So if you're using a Fibonacci level, if we were to grab like a Fibonacci from the low here and grab it to the high, you really don't want to see it pull back much deeper than that 25% to around the 382 fib level. If it pulls back deeper than the 382, then most of the time that Bulldog pattern is invalidated. Okay, so 25% to around 38.2%, that is the deepest you want to see that correction. So that will finalize the Bulldog's pattern. And the reason we call it a Bulldog is it looks like a dog, right? We have the legs right here. So this would be the back legs. We have the back, kind of the body of the dog. Then we have the front legs on the bottom here. Then we have the neck on this push-up right there. And then we have the Bulldog head. So the most optimal entry point for the Bulldog is the head right here. So there's two ways you can take this entry. You can take the entry on the pullback. So let's say there's a couple of candles kind of pushing back down into support here. When it starts to kind of form that cupping formation on the head, you can look for an entry around that pullback. Or if you're a breakout trader, if you much rather trade the breakout, when it starts to break the resistance from the high right here, or the resistance from the high of the head, then you can take a breakout entry, breakout entry on that break. So typically, I'm not a breakout trader. I like trading the reversals. So I much prefer taking that pullback trade on the head. And then typically what we do, if the double bottom is not too far away, then we want to put our stop loss down here. And I'll show you how we take our targets here in a second. But if the double bottom is not too far away, you want to put your stop loss below the double bottom. But in some cases, that will be too far from your entry. So what you'll have to do is if I grab my fib again, you can take a fib from the second bottom there. So you're forming a double bottom. the most recent bottom, you can take a fib from where the low of that bottom is, and you want your stop loss to be below the 618. So typically we want it to be down here, but if that's too far away, you can raise it to be above the 618 fib of that flagging pattern, of that bull flag. The Bulldog pattern basically consists of two patterns. It has the double bottom, and it has like a miniature bull flag right here. So basically you take a fib on that bull flag, and you put your stop loss below the 618 if it's too far to put it below the double bottom. Okay, so how do we find our targets? So typically what you're going to do for targets, if I make this a little bit smaller here, what you're going to do for targets is you're going to grab the fib and you're going to grab it from the farthest bottom, right? Whichever bottom is the lowest. So let's say this bottom is the lowest, the first low. You're going to grab the fib from there and you're going to take it to the high right here. So you want to take it to the high of the back. So once again, we have the legs, we have the back right up here, we have the neck, and then we have the head. So whenever I refer to those body types, those are what I'm referring to. So we want to pull the fib from most of the time the first set of the legs into the high of the back. Okay, so we grab the fib, we pull it to the high of the back, and then here are my Fibonacci levels. So I'll let you guys see my settings here. The extension targets that we look for are the 50%, the 618, the 100%, the 113, and finally the 1618. And here's how you match my settings on TradingView if you guys want to match that on your end. So if you guys are familiar with my Fibonacci setup, which we'll have another video on that coming out pretty soon, but I have an old video you guys can watch, which I'll link in the description. But if you're familiar with my Fibonacci setup, basically what we do is if it can break and hold above the 113, or in this case, the 013, that is the fake out level. So if it goes for a breakout here and it fails to hold above that 0.13, then typically it's a fake out and it's going to continue going back down. But if it can hold above that level, then it's looking for a breakout into those extension levels, the ones that we just mentioned, the 50%, the 618, the 100, the 113, and the 1618 are the final levels. So typically what we look for is we treat them as zones. So like this would be the first sell zone, this would be the second sell zone, and then around that 618 level would be the third sell zone. You're most of the time not going to get that 1618. That's if the Bulldog completely caused the bottom of the day. But most of the time you will get the 50 and the 618, and then sometimes you'll get the 100 and 113, but rarely will you see that 1618. It has to cause a complete bottom to get that level. But okay, that's how we find our targets, and then that is how we look for our stop loss. So once again, one more time, I'll go over it. So here's the full pattern. We have a downward impulse. We have the first set of legs created by a bottom. We have a bear flag. You have that push up into a resistance. It creates the back of the Bulldog right here. Then it turns into a double bottom after the bear flag. And then you have a miniature bull flag bouncing off of that double bottom. It creates that dog formation because it looks like a little dog. The entry is either on the pullback of the bull flag. Your stop loss is either below the 618 or below the double bottom, whichever one is safer. Sometimes the double bottom is too far away. And then for targets, we take the Fibonacci from the first set of legs to the high of the back, and we want to look for these extension levels. Okay, now that you know the pattern, let's go over some examples that we saw on today's price action. So there were three main examples that we saw today. One was pre-market, One was around kind of the 12 o'clock London close, and then one was around the bottom of the day. Let's go over the one that we saw during the pre-market here. This one is very small, just kind of showing you what the pattern looks like on a very small formation here. So we see a couple of things here. We see that downtrend right here. I don't have a brush tool on Addis, so I'm just going to use these to kind of show what I'm talking about. So we see the downtrend right there. We see the first low right there. It doesn't really give you a defined back, but there's the high of that low. Then we see the double bottom right there. And let me delete these so you can see the pattern cleanly. So push down, first low, curved back, double bottom, pops up, and then it puts in the head of the Bulldog right there. So on that little pullback right there, or on the break, you have that little push up. Once again, this is a tiny pattern. I'm just showing you the formation because that's pre-market. It doesn't have a whole lot of momentum. All right, let's go take a look at the next example. Here's the next example. So once again, we have that first bottom. This one is one of the examples that's not very clean because it's very sharp. As I talked about when we were drawing the examples on TradingView, you don't want these to be very sharp. You typically want them to take their time. If they're very sharp like this, it's much harder to visualize that pattern. So we have the first low right there. We have the back, which is actually a very sharp back. It doesn't have that kind of curved back formation there. We have the double bottom right here, and then it pops up and it puts in the pullback. So then you can see the bottom on that move. Okay, finally, this was the best formation today, and this was the bottom of the day, actually. So perfect day to make this video. We had the first low right here. It put in a curved formation on the back there. It put in the double bottom on this little move right here. And then you pulled back and put in the head on this pullback right here. So my favorite way to enter is the pullback right here. But if you're a breakout trader, you can wait for the breakout of that top right there. So you can see the top would have had the breakout right there. And then we had a very large breakout from the low here. If I go back to TradingView, let's go to a 1-minute chart here. I can show you my fib levels. Ignore all my other drawings. Sorry, my chart's a little messy. But if I show you my fib levels here, so in this case, the high of the break here is higher than the back. If it's ever higher than the back, you want to grab your fib from the low to the high of that bull flag formation. We don't want to grab it from this low to that high because the breakout was higher than the back there. Okay, so we grab our fib from our low here to our high here. You can see the correction was a little deep. We typically don't like that correction to be deeper than the 382 fib. In this case, it was very quick. So it pulled back below the 382, but it recovered it almost immediately. So that one wasn't too bad. But if it holds below that 382, then it gets pretty weak. Okay, so looking at our extension fibs, you have the first sell zone right there, the second sell zone right there, and then we have that final level right there. So you hit all of the targets on the Bulldog on the low of today. Like I said, you're not typically going to hit that 1618 unless it's a complete bottom and it reverses the entire move. But all right, guys, that is the Bulldog formation. If you guys have any questions, feel free to put them in the comments below. I'll be sure to get to them. If you guys enjoyed this video, hit that like button. If you guys are new here, be sure to subscribe. And I'll see you guys in our next one. Peace out, guys.